And welcome everybody to a new episode of the FinTech Meetup Europe. It's great that we have kind of 23 people in the room. I hope we will also get some more faces in the meetup. It's the 35th FinTech Meetup. And yeah, feel free to join us at Twitter using the handle FinTech Meetup EU. Then our theme today is basically core banking. Why have we done this? I think it's the heart of every bank. I think it's also maybe also that this is very expensive transformation projects at larger banks, and also we've recently seen a lot of challengers of the traditional core banking software providers, and today we want to have a close look on these new challengers, what they can offer to neobanks, but also to traditional banks. So we're really curious about it. And so I have some news that are not as great. We have Anton Langbroek from Mambu just told us today that he has, I don't know if I can say it publicly, but he has a virus, a very popular one, and has some headaches and cannot join, unfortunately, today. So we think about maybe giving you a video of his view on core banking afterwards. Yeah, we have also Marca in the meetup from Modular. It's also a core banking SaaS system or product. She's managing director in Europe. I think she's from Amsterdam. Then we have Rivo with us from Tuum. And hi. He's a member of the board and chief business officer. And we have here, I don't know if you can see it. I think I have the pictures of you here. I have only one screen today. We have Ayola Tufa from Deutsche Bank Americas today with us. I think she's has deep insight of the core banking of Deutsche Bank. So we have also the view from customer side. I think that's also important to see what the need is, basically. So from a timekeeping perspective, I would say we do the interview with Ayola and 2 pitches instead of 3 until 7:15. We have maximum 1 questions at the pitch, so that we can also then have enough time to listen to the panel that is moderated by Lena, and there you can also put your questions into the chat and interact also with the guests, and just add your questions, basically. So then I would like to start with the pitches. With the interview from Ayola today. So I will hand over to the microphone to Lena.
Thanks, Mathias. Hi, everyone from my side, and a special hello to Ayola, to the US. You're located in New York?
Yes, I am. And hi to everybody. And Lena, Mathias, thanks for having me here. It's always exciting to be in the presence of entrepreneurs that are thinking outside the box and changing the shape of the industry and the way we think about solutions. Yeah. And yes, I'm based in New York.
That's super cool. Everyone in the audience, feel free to share from wherever you are dialing in. I don't know, I can't keep up with New York because I'm dialing in from Kassel, which is a small city in the middle of Germany. But I'm super happy to have you with us, Ayola, and also get the US perspective into this FinTech Meetup Europe. And also let's listen in later on to Modular and Tuum to find out whether they stretch their arms to the US market or have done already. And let's see whether we can filter any differences between the US requirements and US needs and US market specialties compared to Europe. As said, it's a pleasure to have you. Would you mind, just as a kickoff, to give us a bit of background to you as a person, as an employee at Deutsche Bank, and also regarding your current role at Deutsche Bank?
Yeah, absolutely. So I've been in financial services at Deutsche Bank for about 16 years now. I've been in areas that span technology, operations, as well as finance finance, looking after both the investment banking side of the business and more recently in the last 3 years, the cash management and core banking side of the business. Originally from Albania, I moved to the US back in 2001. I did a 3-year stint in Singapore, which was probably one of the most exciting things that I've done. And that's sort of a little bit about me and the role that I play in the organization. At the moment, I run core banking technology for Americas, where we're very much focused on sort of transforming and moving into more modernized core banking technology that enable a lot of solutions for our clients.
Oh, that sounds super interesting. So you are responsible for core banking in the US region. So how does Deutsche Bank differentiate those core systems across the globe, having those different regional responsibilities for that topic?
Yeah, so it's really interesting, right? I think sort of core banking in general is undergoing a transformation at the moment, and it's driven both by customer demand, because we're much more global today than what we were 30 years ago, but also technology innovation, right? Years ago, it was a network of banks that provided banking services to client, and it was relatively closed. And now with open banking, there is so much opportunity for non-traditional players to come in and drive innovation and provide new products and services, right? The technology that we used to use in the past, which is technology that a lot of larger banks have inherited and is legacy, was very much mainframe, monolithic in nature. It worked well, it's very reliable, but it's very difficult to change, right? And for us, well, not just for us, but in general, now we're in the era of cloud-based distributed systems with microservices architecture that leverage APIs to make things available real time, right? And real-time treasury offering is the norm. It's what the customers need, and it's what they demand and expect on a day-to-day basis. And we're no different in that sense. If sort of a little bit of history about, I suppose, Deutsche Bank and core banking for us in the Americas, back in 1999, we acquired Bankers Trust. And with that, we also inherited yet a new core banking legacy system that had to live and operate amongst many other core banking systems that we already had, both in the US, one in the US, but also in other locations, right? And the nature of banking was such that our solutions were focused around countries and legal entities. And this made things challenging, right? As an example, when I joined core banking 4 years ago, we needed to introduce a new legal entity. And it was an effort that took about 18 months and required changes across 50 to 80 different systems, right? So difficult to operate. It wasn't just a simple switch, config change, and boom, you've got a new entity ready to go, right? So as a result, our strategy in recent years has been very much focused on building an in-house core banking platform and solutions focused around account solutions, liquidity services, et cetera, right? Our approach is very much data-driven. So delivering a data layer that standardizes and exposes the underlying account data across 35 different countries. And that's sort of one of the key enablers and the cornerstone of our transformation approach. And secondly, delivering microservices for the core build and making them accessible via APIs. So to your point on what's our approach in the US and how it doesn't differ to other regions, we very much are moving towards building a service once and then using it globally and allowing plug and play, right? So as you move into a given market, you can then pick and choose the services that are relevant for that particular market or for a particular customer, and enable these global solutions to be available in every market so that you don't have to customize things and go back to the sort of monolithic big system, also known as bank in a box, that work well but are very difficult to change.
Mathias, as he welcomed us to tonight's event, he mentioned that core banking being the heart of the bank. And you were mentioning now about those microservices, those pieces within the heart. Can you dig a bit deeper into that, name examples of microservices, how you try to keep this very big heart of that global bank flexible. What would be an example there?
Yeah, and Mathias is so right. It's the heart of the bank. It's also sort of like the backbone of the bank, right? It's generally the back office operations that don't necessarily, they're not the sexy things that you put in front of the client that the client sees in their user interface or in their portal that they interact with you, but it's actually what powers all of that, right? So an example of some of the microservices, for instance, and what drove this transformation for us, which I think is important to understand, I'm here representing the perspective of a client, but we are looking at the perspective of our clients as well to determine our strategy, right? Mm-hmm. And the client demand was very much focused on, I'd say, three things. One is a real need for visibility into their global presence and global accounts, and not just having a global view, but having a harmonized global view. So uniformity of the services that we're providing across different jurisdictions and different locations. And then thirdly, the move towards real-time treasury. So with that in mind, we had to kind of take a step back and think about what's the right way to do this. Oftentimes, banks try to take shortcuts and invest in upgrading a client-facing portal or upgrading the channels with which they interface with their clients. And that's usually not good enough, right? It doesn't give you the capabilities to move towards real time. And it's really important to invest into your backbone and into your back office systems in order to be able to enable both that real-time capability for the clients, but also a harmonized view of how they interact with you as a service provider or as a partner. And some of the sort of microservices, for example, that we're focused on, right? Like having this data layer, first of all, a data-focused approach has been key, because one of the things that we did upfront was standardize our data across 35 different core banking instances and systems, deliver these standard data protocols and have access in one place. And then it was much simpler and easier to deliver customer solutions faster on top of it, right? So we built, for example, a account information and account balance API that makes that available to customers in real time, but also makes it available to our internal users. So we've got about 1,000 internal users, for example, of our demand deposit account data layer, and that's made our internal operations more efficient. We can provide liquidity services that are much closer to real time that give more flexibility. Whether you want to do cash pooling as a customer across all of your global accounts and be able to configure what drives those decisions with much more flexibility than what you would have been able to do in the past. Another example is participating in account pre-validation services. So being able to offer to customers as part of the network of banks, a service that allows them to validate whether account 123 belongs to Lena or not in real time before they even initiate a payment, and therefore reducing a lot of the risk around financial crime management and anti-money laundering. And all of this was available and was enabled because we had this strong data layer, and we could just build microservices on top of it and have something available within a month or two for clients to test out. In the legacy space, would have had to change 35 systems to make that available in a consistent way, which would have been very, very difficult, time consuming and costly to do.
Yeah, I can imagine. That sounds super, super interesting. Can you think of any challenges that you might want to share regarding the core banking market in general and how you face that, the developments?
Yeah, so I think one of the biggest challenges with core banking, and specifically like the modernization of core banking, right? Because it's a system and it's a capability that's been around for so long, and it's at the backbone of just about everything that banks do, right? I think some of the biggest challenges we face are a mix of integration and migration. What do I mean by that? From an integration perspective, like the cost of if you think about the cost of modernizing or building core banking capabilities, the features that you need to build for clients themselves are actually not very complicated, and they're not very costly, right? You need access to your account, you need access to your balance, the interest conditions, and a few other things. So it's not like, you're developing a model to price a derivative, right? But like the capabilities themselves are relatively simple. The biggest challenge is integration, especially in larger corporations that have legacy to deal with. It's bridging that old and the new, right? At the end of the day, our clients want a harmonized experience. They don't care whether the underlying feature is something we buy from a vendor versus something that we've built in-house. And if it's in-house, whether it's legacy from 30 years ago or it's the newest technology from the last 6 months, right? Like they just want a standard, consistent, reliable experience. And for us, that integrating the old and the new is one of the biggest challenges and where most of the effort goes in. And the second aspect of integration is that integrating with the rest of the ecosystem within a large bank or a large corporation. Things like financial and regulatory reporting, anti-financial crime management, risk management. These are all things that sort of are full operations in and of themselves within large institutions, and you need to be able to integrate with them in a seamless way. And our own build is what gives us this flexibility to be able to give a harmonized and a smooth migration experience to the clients. It's not necessarily the complexity in building the right feature. That tends to be a lot simpler.
Yeah. Thanks for those insights, Ayola. Any final remarks, especially with looking at the pitches to come up from Modular or Tuum and the panel discussion? Anything you would like to highlight or summarize?
So I think for me, one of the most sort of interesting things to recognize as well is how important it is for institutions to see the transformation of core banking as part of their strategy, as opposed to seeing it as just a byproduct or something they do when they can, if there's enough money, right? Organizations and leadership teams that see the transformation or core banking as part of a successful strategy are the ones that I think will be further ahead, because it's a challenging transformation. It takes a long-term commitment, but it's a key enabler. And I think the other aspect to consider is sort of this element of integration and how can that be made easier and simplified by using innovation and new technologies.
Yeah. And I also, as a takeaway from this very cool interview, I'll keep the data layer in mind and ask the fintechs later on how they deal with that and how they build use cases also upon that data layer, and how important data in the field of core banking itself is. So let's see what the fintechs will pitch, and I'm super happy that you have been joining us so far. You will be staying with us and listening in what the fintechs will share with us. And thanks a lot, Ayola.
Absolutely,
it was great
looking forward to the
those
pitches.
insights. Yeah, me too.
Thank you,
Matthias. Up to you.
Hi, then back to me. I'm just looking for Rivo to also make him visible for everybody. Hi, Rivo. So let's head over. So we just learned that basically Deutsche Bank is more cooking their own soup, building something from scratch, consolidating 35 core banking systems into one, or at least into services that can be consumed then across different jurisdictions and being integrated in different other services. So I'm curious about what standard software can offer, especially when it's kind of cloud native. Are you working more with larger banks or focusing more neobanks? So can you tell us a bit about your background and what's your take on the next level of core banking or the future of core banking? And also something about your company, of course.
Absolutely, and thanks, Matthias. And also, hi everyone, glad to be here. So my name is Rivo. I'm one of the co-founders and chief business officer at Tuum, which is a next generation API first core banking suite for various retail business and corporate banking use cases. And all of this is offered in a modular manner, which means that you can really pick and choose the certain capabilities that you require. And they work like in a standalone manner, but they do also work seamlessly together. And already as a kind of an intro, it's important to highlight that we just didn't wake up one morning with the idea in mind that let's build core banking platform. Before launching Tuum, we had built core banking infrastructure for more than 15 different large-scale banks. So that, and we did that across all the verticals, from everything that concerns from like customer onboarding processes to the like financial accounting and treasury, and starting from the transactional banking instruments up to the digital channels. So, and we really saw that there was a void on the market, and that those were the key drivers. And therefore also, if you ask that where do we focus on the core banking side of the things, then we have a very clear understanding what do we do and what do we don't do. So namely, we are focusing on this heavy lifting side of the core banking infrastructure that concerns transactional banking, that concerns fully digital contract servicing, then also showing all those appropriate financial entries in the ledgers, and also moving the money over the rails and so on. At the same time, there are like so many satellite systems around and capabilities like AML services, scoring services, and so forth. So that over there we have a twofold strategy. Either we leave the API endpoints open for a customer to continue using what they already have, or for various different jurisdictions offer a la carte menu of, let's say, more widely used or commonly used ecosystem service providers. And all of our core banking infrastructure and the business is built on a number of like key beliefs and hypotheses. The first one is that the banks and regulated financial institutions, they need to be able to tackle three things at once. Namely, you need to have an immediate positive impact on your underlying business. There is no more time anymore for a 5 or 7 year transformation. Secondly, when you launch something, you need to also support the intermediate terms, namely run the balance sheet of a bank like in real time, provide real time liquidity. All the products must be super like personalized and configuration driven. And as a third element, when you look at the things in terms of the next gen core banking, you need to future proof your banking operations, which means that you have to be able to consider your next gen core banking suite as a factory, so that like make it, break it, reinitiate, and all over again. Namely, being API first, like having the capabilities to run on multi-cloud environments, taking care of the aspects of like security and scalability, and also you think already ahead, how can this piece fit into the complex landscape of the existing banking environment? Because, for example, if you go with the financing piece for the like liquidity needs, like how do you fit with the existing like payment gateways, with the treasury, with the scoring and risk systems, and so forth, or vice versa? So that I completely agree with Ayola that aspects towards the integration and migration are something not to be taken lightly, and the success of the rollout will depend on those factors, absolutely critical. And also, we are like one of those companies who do not bash the large and regulated entities and say that they are big and bad and so forth. Rather, we have a belief that change is possible, but change can have to be gradual. So, and that also means that either going, let's say, geography-based, because the modern next-gen core banking suite is already a multi-tenant capable and so forth. So there are ways how to make those things happen. And of course, the next-gen core banking market, it's a global market. So that whatever kind of currency or token or whatever kind of digital asset it is, there needs to be ways how you need to store the balances, how you make the, let's say, transfers happen, how do you lend it or finance it. So there will be a global demand, whatever kind of currency X or token Z there will be.
Wonderful. So I took with me that it's important, for example, that you also have being able to configure your core banking and not just develop it, basically. And I also interested in this that you can also open the API endpoint for internal system, but also for other systems. So you can basically integrate other systems with the Tuum platform. And yeah, so I would like then to go, we can dive deeper into it in the panel. And I would like to also give the microphone to Marca from Modular. Let me just look where she is. I think here. Hi, Marca. You're in Amsterdam, right?
Yes, I am. I'm based in Amsterdam. That's correct.
Cool. So maybe you can also give us a 5-minute pitch of your company, where you're coming from. I think you have also some history in Royal Bank of Scotland and have been head of international development at World First. So no newbie in software for banking and banking in general. So just give us your outlook on core banking and your background, and also what's special about the modular solution.
Sure. Thanks very much for having me, everybody. Really great to be here with all of you, even if it's virtually. So yeah, thank you. My name's Marca. I'm the Managing Director for Europe at Modulr. I'll tell you a little bit about Modulr, and if you have questions, of course, I'm very happy to take them. But Modulr is the FinTech behind the FinTech. So we are an API first payment as a service business. We launched in 2016. And from the very beginning, we set out to get the very deepest access to payment infrastructure, payment schemes across the UK and Europe. So we combine these deep technical capabilities and this deep access with our permissions. So we are licensed by the UK Financial Conduct Authority, licensed by the Central Bank of Ireland, as well as de Nederlandse Bank here in Amsterdam. And what we do is we take that deep infrastructure capability and our permissions, as well as our API first and very young tech stack, and we deliver that to businesses that want to reduce operational efficiencies, reduce their cost, and reduce manual processes. And also, and probably more importantly, have the payment capability that they need in order to run their business and also to deliver to their clients. So we are providing the infrastructure behind very well-known FinTech brands. So for example, Revolut as well as Ripple, but also providing the payment infrastructure to software as a service businesses that want to embed payment capability within their own systems to deliver better services for their clients. So Sage, Intuit, QuickBooks, BrightPay are all really good examples of this. So effectively, we package up all that capability, whether it's that direct access to payment schemes, whether it's the principal memberships that we have with Visa or MasterCard, and we deliver that to UK and European businesses so that they can quickly collect, disperse money, issue instant digital accounts in a way that suits their proposition. We're a very fast-growing company as well. We were listed in the Deloitte Fast 50 in the UK and the top quartile of the 1,000 fastest-growing companies in Europe in the FT. So a fast-growing place. And the other thing that I'm going to pitch to all of you is it is an absolutely brilliant place to work. And we are constantly recruiting top talent. So if any of you have an interest in a payment as a service business, if you're technical, if you're business oriented, if you like writing content for marketing, we are hiring. So thank you.
Wonderful. It's good that you not only want to also sell the solution, but also recruit people, especially these days where talent
Definitely.
there's a shortage in talent. I guess also Rivo is open for new hires. So I would like to. I'm really impressed that you also have not only these Revolut, which is already impressive, but you also offer that for Sage and QuickBooks so that they can also utilize this payment thingies in their own software. So really, you have already a good footprint in the market, I would say. So I will now head over to Lena, that you can also discuss a little bit deeper about that in the panel. So just having to set this up. So there's Lena and there's Rivo. We maybe also give a quick shout out to Anton from Mambu, who's sick. I hope he can recover, and yeah, seeing him next time.
Thanks, Mathias. Marca, Rivo, super happy to discuss and deep dive into core banking next level with you. But before doing so, and we already got a lot of insights, and I took note what I wanted to cover during the panel from your pitches. But before doing so, let's do a step back and start with maybe one sentence from both of you on the key challenge core banking is currently facing. Marca, can you pick this up first?
Sure. I think I would probably start by reiterating some of the points that Iola made. And I think the biggest challenge is that it is core banking is absolutely essential to providing financial services. And yet at the same time, customers don't necessarily care about it. They don't see it. So they need to know that it works, but it's not part of the user experience or the customer experience. It's not the sexy bit of banking. And so I think one of the biggest challenges is giving it that attention and doing that in a way that enables businesses, whether they're financial services or other SaaS companies, that they stay true to themselves. So they are, building the piece that makes them unique, building the customer experience, the brand, and while acknowledging that they need this core capability, whether you're in financial services or a SaaS company and you want to deliver that. So looking potentially outside of your own tech world and buying rather than building.
I could imagine that the reason, or one reason, for core banking being not as much loved as maybe other client-facing feature services, that's because people don't go that far to really understand what the magic within core banking is. And I'm happy with you two tonight to explain a bit about the magic and the use cases that core banking is capable to deliver. So we clear this up a bit and get more core banking enthusiasts in Europe for tonight. That's really cool. Rivo, what would you add from your side, trying to stay with one sentence? What's the key challenge core banking is currently facing?
Core banking is essentially the heart of the business, and that is what it is. And therefore also all the effort so far has gone also to uplift and also change and make this nice looking UIs and digital banks and so forth. But right now, if really the heart of the business doesn't respond in real time, promises you to give the answers tomorrow, day after that, or whatsoever, then you are not living up to the expectation. So core banking, the heart of the business, and this is the only way how basically to provide the seamless services to the customers. And this really need to live up to the expectations.
Yeah, thanks. You already mentioned, Rivo, in your pitch that you are facing a lot of neobanks as your clients that don't have the legacy. And we also heard from Iola that Deutsche Bank has been facing a lot of legacy systems there. What would you say? What was core banking back in the days, and what is it today? And how far are we with that evolution to API first, modular core banking system, etc.? So where are we at in this journey?
And also maybe for a clarification that we are lucky enough to also serve customers at various sizes across very large geographical landscape. So that we do have like lenders and banking groups operating in 23 countries globally. We have large universal banks operating in the Nordics. We are also the core infrastructure for some of the banking as a service largest players in the UK, who host like more than 180 regulated entities already on top of their platform and so forth. So that really we do work with the neobanks, we work with large incumbents, and also, let's say, some of the mid-market players. Maybe that was, let's say, important clarification. But yes, so that core banking landscape and how it has evolved. So as already mentioned today, then definitely everybody know a word of monolith and like know the challenges associated with it. So like if you have a one big system, which is hard to maintain, it's hard to find the talent who even could, let's say, apply those changes to the system. If you make one error, then everything is down. There is no agility in terms of the product management. Maybe your like core banking system cannot even handle like real-time notifications about like incoming, outgoing payments or whatsoever. So that this was really like where it all started. And there are like two main branches. Either those type of systems were built in-house, or there were and there still are also some of the software vendors who support such kind of systems. Then like during the 90s, early 2000s, we moved over to the real-time transactional core banking systems. So that which had this kind of a concept of a client server, so that the internet bank was also able to already more or less to respond like in real time in most of the operations, but still it had the limitations also partly due to the technology. So that in order to perform the end of day, end of period type of processing, you had to like lock down the system. Then what we saw like sometime in like 2010, 2011, 2012 was the emergence of a maximum scalability core banking systems, which started to run also like in AWS already, for example. So when which copied the mechanisms, the way how Flickr, Skype, and other large internet platforms were built, so that the core banking systems we had, which had the horizontal scalability. Then like 2015, 16, 17, we saw emerging of some like real microservices based core banking systems. And now when we look really the, let's say, companies who are pushing the boundaries, then they have like taken all those past learnings and gone also with the like, for example, with microservices, but with the domain driven design. Because in the banking world, there is something like integrity of the transactions. You either make the transaction or you don't. There is no middle state in between. And we have come a long way. And now, like connected also with my previous answer, that the uplift in terms of the digital channels is done. And now it's really the time to also look under the hood. It requires quite a bit of courage because this is a scary beast. And
don't touch it, right?
It's really, let's say, quite often like in the organizations that you really see people having shivers when you even mention core banking, so that you really have to be careful how you, let's say, propose it. But I really do believe that the transformation and the modernizations, like in this regard, they are absolutely essential. They should be part of every single established financial institution, because you need to bring down the costs. You need to bring like the efficiency to the new level. You need to have the proper impact on the like bottom line of operations. You need to provide like real-time services. And also there is another shift emerging, which is also like partly connected with the marketplaces, ecosystems, decentralized finance and metaverse, which we will touch base later on. And this is the concept that the banks are not anymore catering the needs of the internal needs. So that you used to have the core bank like onboard the customer, open the account for a customer so that the customer can withdraw the money from ATM using the card, receive the salary and whatsoever. But now the bank also needs to open themselves up also to other market participants, Otherwise, you're gonna lose the market share. You are like not being part of the new revenue streams, and you really cannot chase the new cash. So that it's conceptually a huge mindset shift from serving the internal needs to also serving other type of use cases out there, and in some cases even offering this infrastructure to the other players on the market.
Yeah. Marca, from your perspective, as I understood, Modulr is rather focusing on this payment huge piece of core banking. Would you mind taking us on this on a similar scale through the history of payments and where we are in this evolvement of the next level payment as a service?
Sure. I think one of the key things that's driving where we are at now is this realization that within financial services, and more broadly, you don't have to do everything, right? So, as Rivo was just alluding to, banks are in the need of opening themselves up in order to both access as well as provide services elsewhere. And so this openness, which is really driven through APIs and new technology, is enabling companies to utilize the expertise of others. So it's really, we're at a really interesting, I think, inflection point. So if financial services companies don't have to do everything, they can look to other companies to provide core banking services, to provide payment processing, to provide core payment capability. It then enables them to take advantage of those firms' expertise, their scale, their stability, and then focus on their own competitive advantage, their user experience, their user interface, and growing their proposition in a way that makes sense commercially and strategically. I think the other piece is that if I were to look forward, where I see this progressing from an evolution perspective, is more towards invisible payments. So more and more, the payments capability is becoming faster, it's becoming real time. And if we think about what that enables, we think about the fact that we are providing digital payments for an instant economy, and we are moving towards a world where we will be able to provide instant payments for an instant economy with the likes of SEPA Instant, faster payment schemes in the UK. And as that type of capability from an infrastructure perspective evolves and is rolled out in more geographies, we'll see that instant economy emerge more and more.
Now let's dig a bit deeper into those several use cases you mentioned already. Even within payment, those different pieces of payments, and can you explain a bit more what are typical use cases, or what's the most used service that you are providing within your payment offering?
Sure. So we provide accounts in the most simple form. So whether that's accounts with Sterling IBANs, Dutch IBANs, Irish IBANs, and we're rolling out more IBAN capability across Europe. This is driven by effectively IBAN discrimination. It's been illegal within Europe since 2014, but there are still systems across the European Union where being able to be paid by your local insurance healthcare providers or to pay the local tax authority, it's not possible if you don't have a local IBAN. So Modulr has not only built the account capability, but is building that local account capability across the EEA. And then what we do once we have the account is we attach all kinds of services to it. So whether that's access to faster payment schemes, whether that's direct debit capability, payment initiation, account information, but also card services. So enabling businesses to issue cards, both virtual as well as physical. And we do that through our principal memberships with Visa and MasterCard. So if we come back to a financial services company, to use an example, whether it's a business that is a FinTech challenger bank, they don't want to get that deep infrastructure access to the faster payment scheme in the UK. They don't want to settle directly with the Bank of England, but they want to have that faster payment capability for their customers, that more instant real-time payment. They would use Modulr. and do use Modulr. And then there are other use cases, for example, in relation to loan dispersals. So Modulr is providing the ability for companies to disperse loans more quickly. So there is the ability through neurotechnology, data, etc., to make decisions around credit quite quickly, but you still need to get the money to people quite quickly. And so there are use cases whereby we are enabling lending companies to disperse loans within 10 minutes. So there are loads of use cases out there across financial services, but also with travel, as well as accounting and payroll.
And how far are you also covering topics such as risk management, or also like in how far are you covering regulatory topics?
Sure. So we're a regulated financial services firm. We're an e-money institution in the UK, licensed in Ireland, also licensed in the Netherlands. So we have not taken the easy route when it comes to the regulatory environments and regimes within the EEA. We are a payment as a service company, so we don't offer risk management capability. We don't offer compliance capability, KYC, etc., to other financial services firms. However, we take those things, those topics, very seriously in terms of running our own business, clearly.
Okay, it's interesting to understand that focus, because I think one improvement area is within payments, making them real time, and all those examples that you mentioned. And the other, let's say, optimization potential lies with the other topics that you currently don't have, at least in your focus. I think it's quite interesting that you took that decision to clearly focus on processing the payments, then and not on be it compliance or any risk management.
Sure. And actually Modulr undertook some research late last year it covered something like 3,000 consumers. What we want to understand is what were their expectations in terms of payments, and are payments actually a competitive advantage within business? And what we found through that research is that there are a few things. One, they are a competitive advantage. So in terms of shopping cart experience, and you guys will know this from your own experiences, that if you get to the last stage and you can't easily pay for your goods, you probably not only abandon that cart, but you probably don't go back to that merchant, because the friction and the frustration at that point is quite considerable. But we also uncovered some really interesting points in relation to who has the lowest acceptance rate for payment friction. And often we think of it as being maybe generation, whether it's millennials or Gen Z. And that's not actually what the research showed. It was that people who have the group that has the highest kind of demand or expectation in relation to instant payments in a smooth payment journey were those who were interviewed who were over 65. And conversely, the demographic that was most interested in fraud protection was people who were in their 20s. So there's some really interesting things that came out of that. And we are not operating within that compliance space, but that doesn't preclude us from moving in that direction in future.
Okay, thanks. I was like preparing for the panel. I asked myself, okay, core banking being such a broad field, what are, let's say, the star use cases, and what are the use cases that rather are hidden champions or not so loved ones? But maybe Rivo, to you, as you are covering, let's say, across core banking, all different use cases. Can you highlight one use case where you say this is the most requested one, or one where you see, okay, nobody from bank side is too much interested in that? Can you give a bit of feedback there?
While covering, let's say, a fairly broad range of capabilities out from the core banking stack, then what we have now seen over the years on the market, that for us specifically, there are like three gateway products or use cases. The first one definitely concerns the transactional banking core. So that basically the infrastructure where all your bank accounts, like multi-currency accounts, like internal accounts whatsoever, are located, and you use like to launch a digital bank, like run the daily banking operations, and so forth. So that this is really like one of the, let's say, real gateway product and use case. The second one definitely concerns everything around financing and providing liquidity to the markets using different instruments. Let it be like lines of credits, let it be mortgages, floating credit lines, and so forth. So like really the whole plethora of use cases over there. And what we also see like popping up for us is definitely the payment cards, either issuing the like virtual or physical cards. So, and then you can like tie those up with various other things. So that therefore it's also like quite interesting for me to listen to Marca and how Modulr does those things, because for us, like, let's say the connectivity to the payment rails and payment networks and payment schemas, this is a kind of a supporting capability. And that was also driven by the direct customer demand, because they really didn't want to take care of all of this hassle to to work out and take like keep it up to date, maintain it, and so forth. So that for us, this is not, let's say, primary use case, but definitely like there is a, let's say, whole separate business for it, as Modulr is doing great out there.
So maybe a dumb question, even if there are no dumb questions, which is, you said you talk about those different use cases. So banks or financial institutions that work with you, do they rather decide on like really pick one module, or do they take them all from Tuum then?
At first, I do think that most of the regulated entities out there have systems from multiple vendors, and plus also like some of the bits and pieces are like built in-house. I think you very rarely see the homogeneous type of institutions. If you look at Tuum's customers, yes, I mean, we have like some of the customers like using only some set of modules, and with the idea in mind to later on expand also to other areas. Some have said already at first that, hey guys, we will take the transactional banking core from you, the lending comes from second vendor, the payment capabilities from the third ones. And I definitely do think that this kind of a plug and play approach is something that market loves. So I would really say that the landscape that we are seeing out there, it's quite diverse. And it's not necessarily bad, because also this way it's possible to avoid the vendor lock-in, and also have the capabilities from the best of breed vendors out there, each one of them doing best of their own abilities and roadmap.
So how often do banks or financial institutions normally, let's say, do a request for proposal? So how often do they actually want to change that? Because I remember you saying a few minutes ago, if you speak of core banking, normally people are rather shocked and don't want to continue, at least not too enthusiastic. How often are you in such requests for proposals?
Well, here is, let's say, a good answer. As we are in the core banking business, then we have number of engagements simultaneously ongoing at all times. And this is really driven, I would say, by multiple factors. The first one is that there are a number of, let's say, new initiatives always happening across the globe. Like a bunch of people, entrepreneurs who want to do something, which means that they would need infrastructure. So that is definitely one of the things. The second thing is that already existing institutions, even if it's a hard and complex topic, They still want to undertake some sort of initiative. And now the third one, and this is something we did not foresee at first when we started to build Tuum, but what is now really taking place. And this is now partly the, let's say, magic word, or even a dirty word sometimes, called embedded banking, which means other industries starting to offer financial services one way or another as part of their core offering. And this is driven mainly by two factors. Everybody look for the new revenue streams, and from the consumer or company perspective, everybody wants to consume frictionless services. So that because you just want to fulfill your aspirations. And suddenly you find yourself that you're speaking with the construction companies from LATAM who want basically to finance the sale of houses and apartments from their own balance sheet, up to upgrade it to the full bank charter, and also issue covered bonds from the capital markets to have cheap money, to some of the globally largest like supply chain companies to do the like invoice financing, or like telemedicine platforms to offer the payment plans for consultations in East Africa. So it's really, let's say, the whole emerging sector that we did not foresee. And but like those players are like evaluating whether to have those capabilities license plus tech from some of those regulated entities, like Solaris Bank, then definitely partly Modulr offers some of the services in terms of the payments and accounts over there. And there are like a few others over there. And some like who have already foresee, let's say in the business plan, sizable volume, they consider also acquiring the license on their own, and then therefore also look at tech stack next to it. And therefore, if you ask how often do we see RFPs, sales discussions and negotiations ongoing, then as part of the core business, a lot.
Yeah, we do have further questions building on that, and I will pick this up, which is to you, Rivo. Does the multi-vendor approach cause complexity or issues in terms of operating the stack? Is there an argument for and benefit to an integrated, unified approach?
Yes, this is absolutely like all the mentioned topics are valid topics, and they can be issues because when having, let's say, like fully plug and play type of approach, one piece from one vendor, second from this, and so forth, then we need to consider that each of the vendor has their own commercial contract. Everybody tries to maximize their unit economics and earn money, which is normal. Then secondly, you have time that you need to spend on negotiating the contracts on their own. Then you have a different type of SLAs, service level agreements, to agree and to follow and monitor. Then you have the data residency topics, so that which cloud providers have the data residing like under which jurisdiction and so forth. And if you look things from a global scale, then things are not so easy that you just provision things from a single environment and off it goes. You look even like in like mainland Europe, you look towards the Switzerland, you understand that none of the bits of the banking data can move out from the country's borders. You look at Gulf region, then you understand that Oracle has, let's say, as one of the few providers, data centers over there. Then you look Southern America, like some players in certain areas and so on. So yes, there are definitely complexities. And there are like pros and cons, when making such kind of selection. What we have seen, like with some of the customers, like who have, let's say, in the final stages to choose us as their heart of the business, has been the reason that they could get so much from us, like in the foreseeable future, even if they start small at first. But at the same time, like if customer wants more flexibility and mitigate the risks, like either due to the vendor lock-in worries or whatsoever, then I mean, we are also happy to just do well our part.
Yeah. Thanks for weighing up those pros and cons. Marca, one question from the audience to you. What do you see as the biggest hurdle when connecting and switching from old slow payment schemes with nightly booking jobs, etc., to event-based real-time systems? So do you have to wait for slower systems connected to yours?
I have to confess, we haven't seen that yet. We are in a place where we're servicing a lot of fintechs and also SaaS companies. So we haven't had that experience to date.
Okay. Okay. Okay, we did hear from Ayola about the data layer, but maybe I missed this part while you were talking, but how about that concept of data layer, and how far are you involved in such data layers at bank side or financial institution side, or is this fully apart from what you do?
I guess in the context of sort of bridging payment schemas that are instant with old systems that operate on an overnight batch basis, that's very much a reality that larger institutions face that have legacy, and we're no exception to that, right? I think one of the things that's been a key enabler is being able to offer those instant payment services to our customers and those schemas in locations where we participate and make them available, and bridge the gap with legacy, right? And sometimes that means building a layer on top of your legacy system to be able to provide a response back. So when you're processing, for example, an instant payment, very important that you get that response back that, okay, yes, we got the payment and the payment is booked within a few seconds, right? But it might take, if you're operating in a jurisdiction where the real-time capabilities in your core banking system aren't there, it might take a little bit longer for that to be reflected in your statement if you're a customer, right? Which goes back to the importance of upgrading your backbone everywhere, and only then you're going to be able to offer true front-to-back real-time capabilities. But you can still be in a position where you offer instant payment capabilities to your clients, but some of the ancillary services around that might not be as instant or as real-time if you've got older, more archaic systems that you're having to deal with.
Yeah, thanks for answering the question, Ayola. Good to have you back. It's anything to add, Marca, from your side on that?
No, I don't think so.
Okay, then coming back to the data, go ahead.
I can add, at least on top of the data topic, so as we had the chance to consolidate all the former know-how and so on. So the way how Tuum operates is that everything is in real time. And we have the concept also that it is much cheaper and more efficient to write down the transactions the moment they happen and avoid batches at all cost, which means that if something happens, then everything is related both in the financial ledger and also in the data lake. So that, for example, if there is a fee attached to the outgoing payment, then the financial event engine has the immediate mapping with the fee associated and with the GL entries, so that the institutions have all the time, just-in-time insights and real-time balance sheet. And at the same time, all the associated transactions, these are replicated to the data lake, so that also operational teams can have the insight and full understanding what happens when and how. So, and then we can already see that the challenge or complexity relies in the ability to process all of this data, because you really do not need to wait until the overnight patch with the new data comes in. So all the data assets are available at all times.
Mm-hmm. That's a really important point, Rivo, and sort of having those data lakes available, and sort of for us as well, starting to hollow out some of the legacy systems and move some of those capabilities to run on top of the data lakes as opposed to run on top of the databases of the legacy systems, then becomes a key enabler to moving towards that real time, even if you're still processing things across both a mix of legacy and new strategic assets.
Absolutely agree.
I would like to pick up one word that we've been hearing a lot tonight, which is integration. And especially at this point of data layer, etc., I would like to pick this up. As Ayola already pointed out, that she sees that as one major issue. Marca, in how far are you affected by those, let's say, integration hassles, let's say?
Sure. So I guess there are a few points where Modulr integrates both with our customers, so connecting into their platforms, or on occasion they also connect into ours, depending on the way that the service will work. And then, of course, we're connecting to other payment schemes, right? So whether that's a processing service in order to process card payments, given our membership with MasterCard and Visa, but also connecting to payment schemes, and so integrating and being able to connect to those. So we don't face some of the same integration challenges which Ayola set out earlier, but one of the things that I highlighted was the API connections that we use in order to connect to our clients, but also connect to the payment schemes. So that's clearly a key part of our technology as well as our proposition.
Okay,
so
and how to
different.
Okay, and how to integrate Tuum, Rivo?
All the capabilities of Tuum and each of the module publishes its capabilities over the APIs, which means that we are already API first. When you look, most of the players on the market, they were established before, and now there have been API layer built around. Versus whenever we started to design and build Tuum, we already had API first design. So that this is like everything that concerns also like developer friendliness, how fast customers can start benefiting, taking into use, how universal it is, let it be like some of the like integration partners residing wherever, and so forth. So it's like kind of a modern standard, RESTful APIs, well documented, having all the live sandboxing capabilities and API docs available, and voila, suddenly those things are so much more easier than they used to be.
Maybe I'll pick up that one question we had from the audience now, which focuses a bit more on the setup of Tuum technology, if I understand that correctly. Michael asked to Rivo, as I understand, Tuum is based on one or multiple blockchains. How do you handle transparency and traceability without making all financials from your customers open to everyone?
Okay, we are not, maybe let's make it clear that we are not based on the blockchains. So that, of course, like all the transactions are recorded in a mutable form, and there are like one or multiple ways how to secure the integrity of the transactions, because like we never delete data, so that the data, let's say, records can definitely change the status and have its like validity ranges and so forth. But especially also like such a regulated field as financial services, you always need to be able to prove the full audit trails, who did when, why, and what, so that like all these data sets are basically immutable.
So Tuum is not...
But what concerns transparency and traceability, then we are in a super lucky situation that we never duplicate the key or master data, which means that if customer gets onboarded and registered to the customer file, then all the other capabilities around, let it be like financing contracts, payment cards, accounts, whatsoever, they just do reflect only towards this unique customer ID. And therefore, like all the interactions, like end to end, from starting, for example, from onboarded customer to, let's say, the loan application flow this customer has done, or the request to activate, deactivate card whatsoever, they are always and always associated with somebody. And this somebody can like also represent companies, because company is not a person like on their own, and so forth. So it's like we have thought about such kind of a traceability aspect throughout the system. And at the same time, it also like enables out of the box like GDPR and data privacy requirements, like to mask and encrypt required data sets.
That helps. Thanks. And as said, integration seems to be a big part, because another question popped up, Marca, about integration.
Right.
Do you have a forecast for a timeline to integrate and plug in your solution? The question rather refers to traditional banks, like integrate that in traditional banks. Now, I understood from you, your clients rather are fintechs, but happy to learn about the timelines that are there for your particular client group. And what about required prerequisites to integrate and plug in your solution?
Sure. Right, so I'll cover off as much of that as I can. If the questions get super technical, I might suggest that you guys invite back Altai Urel, who is our Chief Product and Technology Officer. But in terms of the two things, one, in terms of the prerequisites to integrate with Modulr and to provide our payment capability, you need to be onboarded by us. Clearly, we're a regulated financial services firm, so we would clearly undertake all of the customer due diligence. That would be the starting point. When that is then complete, because we don't do the technical integration until we've done the upfront compliance onboarding, then the technical integration would start. But in the same way that Rivo was highlighting that Tuum is an API first business, Modulr is as well. So in terms of having a really friendly dev center and the ability to test and access the sandbox in advance, that capability is there. The time it takes can be very, very fast. One of the things that we do find is that often the time to connect isn't necessarily down to technology or us, but typically just where providing that payment capability sits within the client's technical roadmap. But it can be quite a fast integration. If you want to connect with me separately, I can perhaps get you the exact or the fastest integration time from our CTO.
Yeah, thanks for offering that. So feel free to connect via LinkedIn with our speakers and raise your questions afterwards offline as well. Rivo, can you highlight a bit on timelines for integration and required prerequisites to do so?
Absolutely. So that let's say that now a customer has chosen Tuum, like let's say one module, multiple modules. What happens is that using automated scripts, we provision a new vanilla instance for the customer. And this is basically done like 30 minutes, 1 hour, and the customer has the full set of APIs and all the configuration capabilities already up and running. So that basically the moment the customer says yes, then the DevOps people like in the operations team can basically provision the whole vanilla set of core banking infrastructure to this specific customer. And that means that the customers can start populating the values to the various configuration parameters and so on. And the APIs are there, so that all it takes is to understand how the API structures work, and off it goes. So that when speaking about the customer project timelines, then what we have seen is that, for example, one specific digital banking offering, also like pan-European one, so that we replaced like the traditional vendor over there. And within 5 months, the new multi-currency core bank was up and running, and also the SEPA payments capability together with the real-time financial accounting. So that was 5 months. Now, when what we have seen is that some of the major transformations at large universal bank, which concerns financing capabilities, this project has lasted a bit over a year, but I do think that most of the efforts have gone into the other areas, not into the complexity of integrating with us. So I tend also to agree that there are a number of other factors that take more time than to be able to integrate with us.
Mm-hmm. Okay, Okay, thanks. I think as for now, I'm checking the chat in parallel. We've learned a lot. I think we learned about this rather fragmented vendor approach that you, Rivo, see. We talked about integration. We talked about those modules that are there and what are rather the star modules and what are the one rather not too much used right now. We talked about the evolution. I'm just trying to summarize what I can think of to also trigger a few more questions. The audience, feel free to share more as I already included a lot of questions now, but I'm happy to also in a few minutes lead to the Q&A on this panel. But Marca and Rivo, maybe trying to get into like summing it up. And again, looking at core banking from the evolution and then also into the future. Do you have some final thoughts on decentralized finance and metaverse banking and its effects on core banking?
Yes, sure. As we have briefly touched base already, like on the evolution stories, then like everybody also like have their own real life daily experiences, like using their bank, and then most probably also like most of you have also seen and heard the news of like JP Morgan and its virtual branch like in a metaverse where the tiger is hanging around and there is a picture of Jamie Dimon like on the wall. So that these are like two different worlds. But yes, I do think that banking in the like decentralized finance world and metaverse banking, so that this like the baseline is that banks need to start publishing their capabilities to other actors and ecosystems out there. So that if you already consider anything decentralized, then this is like exact opposite to the traditional finance world where you have the central banks, you have the commercial banks and so forth. And now when you go into the DeFi space, it's all one sort of a business communication network where each of the participants offer a certain set of capabilities to other participants on the market. And this is fundamentally different thing. So what we see in terms of the evolution is that there are definitely the players right now who are trying to bridge the gap between the traditional finance and decentralized finance, because namely you still need to onboard the customers, do the proper background checks and so forth. You need the rails and ways how to do the funds in, funds out transfers. You need to track the customer assets. Like you might want to do the crypto asset backed lending and then like do all the associated like custody integrations and so forth. But now things get super interesting when we move even from the DeFi to the metaverse banking, because now you really need to reimagine, like in a kind of a visual world, how those traditional instruments used to be. What are the kind of new payment rails? Who owns those rails? How are you going to move it? And another like interesting thought, like you have, let's say, fiat money, you move it into the, let's say, metaverse virtual world. So which means you buy, let's say, some virtual clothes or virtual land. But now think another way around. How can you get your virtual money and go and spend it on the store? So, I mean, there are like tons of interesting challenges around there. But I do think that it brings like tons of new opportunities on the market. If we look, for example, like different like physical assets, and we look at the tokenization of those, which means like basically bringing a digital representation to the blockchain net or like DLT, distributed ledger network, and then providing, let's say, the secondary market for those. Let it be real estate, art, company shares, and so forth. So there are like so many, like such a big number of use cases that the banks must consider. They have to see how they can plug their core banking system into this network. What is their role to play over there and so forth? Because I do think that we can't ignore all the like emerging trends taking place over there. Will it happen immediately? I highly doubt. But as there is a nice say that basically the secret of getting ahead is getting started. So let's see what the future brings.
And can you name any approach that Tuum is doing in this direction?
Yes, definitely. We are like looking our positioning like in the Web3 and decentralized finance space, because also like right now, as the whole platform is already by default multi-currency capable, then we have a thinking that if you have the account like storing the British pounds, euros, USDs, why shouldn't you be able to also have a simultaneous real-time balance of some specific token over there? Then also, as the platform can technically scale and also work with those enormous data feeds coming in and going out from, let's say, digital asset market, let's see what we can do over there and what kind of payment integrations we need to do on top and so on. So when there is the actual like thought process going around it, because it really touch bases even the, let's say, lowest level fundamentals, like how many points after comma do you store like in your data storages, like to support the crypto DeFi space use cases, so that it's not, let's say, just, let's say that saying and flagging with out there that we do something in this space, but you really have to think it through, understand your positioning, but we clearly understand we can't ignore all the developments happening in the space.
And how is that with Modulr, Marca?
Yeah, thanks for asking. So we are clearly interested in decentralized finance and are already supporting crypto companies and crypto exchanges in terms of providing really fast, seamless payments in order to do fiat on and off ramp. And we really believe that that ramp back to mainstream currencies that Rivo was describing as being an interesting reverse example is something that I think will continue to be important, and Modulr provides that bridge. We're also thinking through and interested in some of the new developments, decentralized finance, central bank digital currencies, and we have an innovation hub called ModLabs, and it was recently participated in a green paper between the Bank of England and the Payments Association. So really thinking through digital currencies and the potential for those to operate in a more mainstream way. That is, of course, is still centralized finance, but also it's more of a halfway house.
Okay, sounds interesting. Maybe connecting offline to that to get more information on the results of that green paper. Thanks for referring to it. So final question here. Normally it's always two questions that I raise at the end of the panel. You can pick one. A is, what would be the one wish you have for the further development of core banking? And B is, if someone who's not familiar with core banking wants to pick this up, which gurus, sites, newsletters can you recommend? You can choose whether you do A or B. Rivo, do you want to pick it up first?
So do I need to give the answer to both, or you want me to answer like just A or B?
I just thought you pick one, but I'm happy. Okay. If you go fast, go for both.
Okay. Like if someone is not familiar with the core banking topics and so on, then definitely I do like enjoy the pieces written by a gentleman called Ron Shevlin, who is also like co-author like in Forbes and so on. Like definitely interesting thoughts, sometimes provocative, but always a good read. Then like in Europe and like UK, then Martin Wybrow with the like next gen core banking publications, like also speaking with every single major vendor out there and sharing his thoughts. Also being critical. I didn't get the
name. If you, sorry for interrupting. I didn't get the name. If you're so nice as to share it in the chat.
Yes, I can.
Great. You can do that. Yeah.
Martin Wybrow. So definitely interesting gentleman to follow and his webpage. And then also Mr. Marcel van Oost, I don't know whether I pronounced his name correctly, but he's gathering also like a lot of fintech and core banking tech news in aggregated manner, providing some insights and analysis like aside. And then what I personally do also like read is that definitely top tier management consulting firms and also large integration firms like Accenture and so on, they do publish and do different banking studies, provide the characteristics of a next-gen core banking suite and so on. I mean, always a good read. Everybody like needs to extract the bits and pieces relevant for them, but typically easy reads.
Thanks. These were a lot of advices. Thanks, Marca. Who would you recommend, or what would be your wish for the further evolvement of core banking?
Well, I learned a couple of new gurus there, so thanks, Rivo.
Yeah.
That was really helpful. In terms of learning, one of the things that I find really useful and always found useful in my early career in financial services was McKinsey. They, together with Accenture and Deloitte, so Rivo, you mentioned some of the consulting companies, but they typically are doing research that can be quite forward-thinking, that gives you statistics and data in terms of the direction that financial services is moving. And it may not be the pinnacle of what is coming, the future in terms of innovation, but it's really well-founded, very well set out, very evidence-based, and also really easy to digest. So I would really put an emphasis on those types of companies and their publications, because they're out there working with potential clients, understanding how they can monetize these new developments, right? In terms of understanding them and then consulting and providing service in that space, but also sharing that knowledge in order to demonstrate their expertise. And yeah, their newsletters and research papers tend to set things out in a really clear way, in a way that enables you to make good decisions.
And definitely some of the like investment firms and VC companies also like some really good publications. And maybe as a final tip, I mean, like to me, for example, like Twitter has found its like new use. So that like also like those previously mentioned gentlemen and also like tons of others are like sharing their thoughts like in their Twitter feeds, like, I don't know, 24/7. So which makes me to question that, is there like enough time also for sleep? But definitely like all the like core banking tech, fintech scene, it's so lively that the constant like set of news and thoughts and ideas shared.
Okay, cool. Well, I see further questions in the chat regarding Tuum. When do you show up at Gartner MQ core banking reports? Happy to pick this up. But as for now, I would like to close this panel. Thank you, Marca, and thank you, Rivo, for joining us. I would like to hand over to Mathias that he can do the outro of this event, summarizing it all. And then let's stick together for a few minutes more and have further offline questions with our speakers. Ayola, if you're still with us, then we'll get you back here on stage, and then we can have further talks rather in an offline attitude. But again, before handing over to Mathias, Rivo, Marca, thanks so much for sharing your insights. Very fruitful discussion. Thanks for sharing all of that. Mathias, please continue summing.
I would like to use the opportunity to just point you to the next meetup at May 19. I also posted the Eventbrite link, so don't forget to pencil it into your diary. I would like to thank you also, Rivo, Marca, and also Ayola, for joining in and highlighting some thought-provoking or some thoughts about this boring area of core banking, which is not so boring because I think you can, drive a lot of value and also, transform existing institutions and fuel new ones. With that, if you want, you can stay a little bit longer here in the chat. I would like to say goodbye to everyone who has a date with Netflix now. And yeah, so see you good and goodbye.